Welcome back to In Business. JP Morgan, their earnings came out earlier this week. They did beat the street, but revenues fell short. And that disappointed some investors out there. Let's gauge the outlook for some other banks and Wall Street firms reporting results. For that, we're joined by Betsy Graseck of Morgan Stanley. She's a Bloomberg Best for diversified financials, according to the data that we track here at Bloomberg. Welcome to In Business, Betsy. How common of an ailment is this issue with revenues falling short?
For the last couple of quarters, there's been some concern about revenues, and it's a function in large part about where the shape of the yield curve is. As the yield curve flattens, that is putting some pressure on bank revenues.
And from the speech that Ben Bernanke gave today and this indication of more stimulus, obviously rates staying low for a while here as well, the picture hasn't changed on that front.
At this stage, that's correct, and we are looking for some revenue declines as we go into earnings on a Q-on-Q basis. That said, we do think that there are opportunities for the banks to show improvements in credit. That is one thing that JPM showed. We are anticipating improvements in credit from many of the other banks that are going to be reporting next week. And I think the basic question with regard to the top line and the shape of the yield curve is, will Bernanke be successful in getting down the long end of the curve and re-stimulating that demand for risk assets? I think what's going on is an interest in trying to get investors off the sidelines and back into risk assets.
In reading some of your research as prepared for this interview, I was really interested in how you were trying to gauge the financial shock or cost that may come as a result of this foreclosure crisis. To what degree are we going to hear comments like JP Morgan head Jamie Dimon gave in terms of saying that, the costs are essentially going to be minimal?
Well, I think what we've got is foreclosure costs and origination costs. There's two tracks of costs associated with the mortgage environment today. And on the origination side, that's what leads to these reps and warranties that Jamie was discussing. And on the servicing side, you've got potentially higher foreclosure costs associated with the servicing books. What we did for investors in some of our recent research, try to gauge that if servicing costs went up 5%, you'd see about a 1% hit to EPS for the big servicers like a BAC, a JP, and a Wells Fargo.
But as you point out, some of the more important comments may come during perhaps the conference calls. You say that the banks either need to fess up and announce a reserve bill or just say that they're clean. Are you expecting many confessions?
I have to say, I think we're going to be in a kind of get through it type of environment as it relates to the foreclosures and as it relates to the reps and warranties. I think it's going to be quarter by quarter. We've got it baked into our models over the next several years that we will be having, some elevated costs associated with this. What's paying for that, in part right now, is a nice little refi boom that's going on that's helping to pay for some of this.
And in terms of buys right now, you like American Express. You're not terribly worried, it would seem, by this continued fight with DOJ?
It's a very interesting question. The way that we're positioning American Express as a long call is for two reasons. One, we do see consumer spending hanging in there. And actually, when you look at some of the consumer spending data, it shows that consumer spending has been pretty stable year on year. And we think that's going to be a positive for AXP's upcoming quarter next week. In addition, we're expecting that they're going to be pulling back on their expenses and their pre-tax margin expanding over the next year. That's the other leg of the call. And it's not that exposed to the yield curve. So for people who are investing in large cap banks, this is a way of having some exposure to the consumer without having to take that yield curve risk. The DOJ, as you raise, is a question in regard to the litigation. We think that AXP stock already reflects a full, cut of their discount rate equal to Visa MasterCard, which is essentially what the litigation is about. So we think that kind of bear case scenario is priced into AXP already.
And in terms of the banks right now, you are expecting capital deployment to shareholders. You're expecting dividend hikes going into 2011. Apart from JP Morgan, which obviously gets mentioned a lot on this front, who else are you expecting?
We are anticipating that starting sometime in the first half, second quarter or so, that there will be several banks will be able to start to raise dividends. Names like Wells Fargo, PNC, names like some of the processors, Bank of New York, State Street, Discover. These are institutions that we covered where we're anticipating some increased dividend hikes.
All right. Betsy, thank you very much for telling us what you're expecting.